In the energy markets today, crude oil definitely the story, up over 4.5% on its highs. All of the losses recovered from the last 2 days and then some. The 2-day drop went from a close on the day before Thanksgiving, November 26th, of 58.32 down to a low close 2 days later, about 55.42. Today we got up to about 58.44 on the close, so a full 12 cents higher than the close the day before Thanksgiving. So all of the losses recovered and then some from that big 2-day drop. Part of it is the upcoming OPEC meeting, in which we got comments this morning from the Iraqi oil minister saying that another 400-barrel cut was needed to balance out supply and demand. Interesting that it came from the Iraqi oil minister, who is the worst country in terms of compliance for the prior production cut. So it doesn't necessarily mean it's going to happen based off of his request or his speech to the media. Because again, for the price to go higher as it did today, based off of a potential 400,000 barrel cut, it's likely the Saudis would have to be willing to absorb all of that, because the rhetoric is it should be balanced across OPEC, but the reality on the ground is that it tends to be Saudi Arabia. And with the Aramco IPO coming up, they certainly would like crude oil prices higher, but down the road they're going to have less and less of an effect on crude oil price based on production. When they need to raise money, rather than trying to spike prices, they can sell shares in Aramco once they're a public company. So it is a government controlled and government owned company. So that's kind of the dynamic there. We'll see if that comes out. OPEC meeting scheduled for December 5th. We should get data sometime in the late afternoon of December 5th. And then lastly, the EIA report came out this morning. We got a draws in both crude oil and gasoline, for over 4 million barrel draw in crude oil, over 3 million barrel draw in gasoline. We are still 3% above and 4% above, respectively, the 5-year average for crude oil and gasoline. But the real story, in my opinion, is refinery utilization shot higher. It finally rebounded above 90, which, as I mentioned, this particular set of refinery utilization numbers was the slowest to get back above 90% since 2011. So it was a significant event that this happened. Refinery utilization represents demand on the ground. So it was a very dramatic move back up after falling last week.